Hello, welcome back. I am Sage and you're watching 𝐊𝐿𝐴𝐚 TV live from Sydney. And this is the Sectoral Pulse show by 𝐊𝐿𝐴𝐚 TV, a special show covering all sectoral movements from the markets for the day. Australian shares dropped the most in nearly 3 months on Wednesday, tracking overnight Wall Street losses, with banks and miners weighing heavily on the benchmark index. The S&P ASX 200 index fell in trade, today snapping a 3-day winning streak, and was on track to mark its worst session since February 26th. The benchmark rose 0.6% on Tuesday. Major indexes on Wall Street fell overnight as a sharp decline in telecom stocks and weak housing stats data overshadowed strong retail earnings. Investors now await minutes from the US Federal Reserve's April policy meeting later in the day. And rising inflationary pressures in the United States has been increasing investor speculation that the Fed could possibly raise interest rates sooner than anticipated. A measure of Australian consumer sentiment fell in May to break a 3-month winning streak, with the measure of family finances compared with a year ago down 5.4%. Among sectors, the miners fell as much as 2.8%, even as Chinese iron ore futures rose overnight, and global miner Rio Tinto Limited fell 3%, while larger peer BHP Limited fell 2.5%. The heavyweight financial sector eyed its worst session in a week, with all the big four banks trading in the red. Energy stocks were the biggest losers on the benchmark index, snapping a 4-session rally as oil prices dropped overnight and Woodside Petroleum Limited fell 1.6%, while Santos Limited lost as much as 2.9%. Gold stocks also saw losses, with sector heavyweight Newcrest Mining Limited on track to record its worst day in nearly 3 weeks. While all the sectors are dragging the index lower, tech companies are outperforming the ASX. Appen is surging after telling shareholders it will restructure. But the tech sector is also faring better than the overall market, down 0.9% compared to a 1.9% slump for the benchmark. Appen shares are up 16.4%, Nuix is up 6.4%, Altium is 1.8% higher, and Nearmap is up as well 1.2%, and WiseTech is up 1.2%. New Zealand's benchmark S&P NZX 50 index fell 0.7% to 12,336.09. Investors are awaiting the country's budget on Thursday, where the government is expected to unveil a smaller deficit and a more optimistic economic outlook. On the global front, Wall Street stocks fell on Tuesday, with technology shares turning lower in late New York trading, while the US dollar touched its lowest level since late February. The Nasdaq also reversed course to end the day lower, while the Dow and S&P 500 added to declines late in the session. The S&P 500 Technology Index was the biggest drag on the benchmark S&P 500. Investors were anxious ahead of Wednesday's release of minutes from the Federal Reserve's April policy meeting, and rising inflationary pressure in the United States has been increasing investor speculations the Fed could possibly raise interest rates sooner than anticipated. Fed Vice Chair Richard Clarida on Monday pointed to the weak April jobs report as proof of lingering weakness in the economy, and telecommunications shares lost ground while retailers mostly gained. Walmart Inc., the world's biggest retailer, raised its full-year earnings forecast. AT&T Inc. added to declines from Monday when it said it would cut its dividend payout ratio. Concern over the Israel-Palestinian conflict also added to investor unease. World powers, including the United States, urged a truce in the conflict as Israel bombarded Gaza with airstrikes and Palestinian militants resumed cross-border rocket fire on Tuesday. Moving on to updates from the currency markets, the US dollar tethered near a 6-year low against its Canadian counterpart and nursed losses against European currencies as expectations that the US interest rates will remain low undermined the greenback. The minutes from the US Federal Reserve's most recent meeting, due later on Wednesday, are expected to confirm that policymakers think a rate hike is still in the distance. Investors will also be scrutinising consumer price data in Britain and Canada later in the trading day to determine how quickly major economies will be forced to rein in their accommodative monetary policy, which holds the key to the dollar's trend in the medium term. And against the Canadian dollar, the greenback traded at 1.2069 Canadian dollars, close to its weakest since May 2015. The British pound bought $1.4188, which was near its strongest levels since late February, and the euro was steady at $1.2223. The dollar was little changed at 108.90 yen and 0.8976 Swiss franc. Data last week showing US consumer prices rose 4.2% in April from a year earlier, was the fastest increase in more than a decade, which stunned investors, and Fed policymakers have said this is a temporary spike and reiterated that they expect interest rates to remain low, which has taken some steam out of the dollar, but not all are convinced by the Fed's persuasions and expectations for policy tightening in Canada and the gradual lifting of coronavirus restrictions in Britain have lifted both countries' currencies. But any suggestion of benign inflation could help the greenback recoup some of its losses. Elsewhere, the Australian and New Zealand dollars held on to recent gains, but traders are closely watching commodity prices to determine whether the Antipodeans will break out of their recent trading range. The Australian bond yields traded down 0.17% to 1.786, and the yield on the benchmark 10-year US Treasury notes fell to 1.637%. In the cryptocurrency market, Bitcoin stabilised at $43,253 and rival digital currency Ether traded at $3,409. But some jitters remain after China banned its financial institutions and payment companies from providing services related to cryptocurrency transactions. The prices of Bitcoin tumbled 7.6% after the world's second largest economy, China, banned financial institutions from offering Bitcoin and all other cryptocurrency services to clients. This was announced in a joint statement by the National Internet Association of China, the China Banking Association, and the Payment and Clearing Association of China over concerns of volatility and speculation in the digital assets. The three bodies are of the belief that digital assets aren't supported by real values and that their prices can easily be manipulated. However, this ban on cryptocurrencies doesn't mean that China has made it illegal for individuals to hold digital assets. And earlier, when Nigeria made such a move, the peer-to-peer trading among the cryptocurrency holders surged by 27%. After the announcement was made, the cryptocurrency prices, especially those of Bitcoin, plummeted. The world's largest cryptocurrency crashed by 7.8% to touch $42,349.15 level. However, later in the day, it recovered partially, and Ethereum was also down 1.96%. China's latest ban comes days after Tesla boss Elon Musk's tweets melted severe blows to Bitcoin and led to considerable declines in its price. On the commodities front, the gold prices closed in on a 4-year high due to weaknesses in the US dollar and fall in Treasury yields. On Tuesday, the spot gold price was up 0.1% to US $1,869.40 an ounce. The gold futures were trading higher by 0.05% to US $1,868.85. And meanwhile, the crude oil prices fell after hitting 2-month highs, while the WTI crude oil price was down 1.2% to $65.49 US a barrel. The Brent crude oil price has fallen 1.05% to US $68.74 a barrel. The crude oil WTI futures were trading down by 0.76% to US $65.02. Next up is the news that matters. Australia's government said on Wednesday it will build a taxpayer-funded $468 million gas-fired power plant, arguing it is needed to drive down electricity prices, despite opposition from the power industry. The government said last year state-owned Snowy Hydro would build a new gas-fired plant if other companies did not come up with plans by April to build 1,000 megawatts of capacity to fill a gap that will be left when AGL Energy shuts its Liddell coal-fired plant in 2023. Energy Australia, a unit of Hong Kong CLP Holdings, has committed to build a 300 megawatt gas-fired plant, and mining billionaire Andrew Forrest has proposed a 660 megawatt plant, although he has yet to make a final decision. Both would be backed by government aid. The power industry has opposed the government's intervention in the market, saying such a large plant would not be needed and would deter private investment in renewable power. So Snowy Hydro's environmental impact statement for the Hunter Power project in New South Wales state says in an average year, the plant is only likely to run at 2% of its capacity. The 660 megawatt plant will be built in the Hunter Valley, the country's biggest coal-producing region, which is under threat from the push toward cleaner energy. A by-election will be held in the region this weekend, in which the future of coal mining jobs will be a key issue. Mr Taylor said the Hunter Power project would create up to 600 jobs during construction and a further 1,200 indirect jobs across the state. Green groups said it makes no sense to rely on gas as it is polluting and expensive. The government's move, which fits with its effort to promote gas to fuel a recovery from the COVID-19 recession, comes a day after the International Energy Agency said the world needs to stop funding all new fossil fuel supply to reach net zero emissions by 2050. Moving on. So, are there any economic events that can drive the overall market scenario going ahead? The seasonally adjusted Wage Price Index, or WPI, rose 0.6% in March quarter 2021, with the annual growth rate at 1.5%, according to figures released today by the Australian Bureau of Statistics, or ABS. March quarter 2021's moderate growth was influenced by regularly scheduled increases. Improved business conditions saw employers revisit wage reviews postponed during the height of the pandemic. The phased approach to the delivery of award increases saw jobs in the accommodation and food services, retail trade, arts and recreation, aviation and tourism industries receive rises previously recorded in September quarters. Westpac Consumers Confidence data for May will also be out on Wednesday, and the data is expected to guide the domestic stock market through the day. Investors may also closely scan the market, manufacturing and services PMI flash on Wednesday. According to experts, the Australian dollar may be more impacted by the wage price index data and Thursday's employment data. The domestic market is expected to further scan the minutes from the Reserve Bank of Australia's, or RBA, latest monetary policy meeting to take hints on further easing of rates, even as Statement of Monetary Policy, which was released just after the meeting earlier this month, shared most of the details about the meeting. On Wednesday, the US Federal Reserve will release its minutes from the latest monetary policy meeting as well. The US investors are expected to closely track the minutes to take more hints over the interest rate trajectory, and the latest rise in inflation along with falls in retail sales have raised concerns in the US. Thanks so much for your time watching. That is all for now. Stay tuned with 𝐾ALKINE TV for more live market updates, and we will be back with more news on markets, economies and diverse themes and sectors. Sage signing off for now.